Bum, bum, bum. Yeah. How's it going? How's it going? Yeah. It is your boy TJ, and I'm just coming out straight live with you. Yeah. Where we're going to be talking anything and everything around real estate. And whilst I am talking to you, I'm just going to check in to see whether we are live everywhere. And where are you watching me from at this particular moment? This is M5. We talk about anything and everything around property on here. So let me know where you're watching us from today. All right. So as it is a Monday, and I'm sure you are plugged in at home in a cozy winter, and maybe you got some fire going on in your real estate, and it might not be a bad day to actually talk about owning not just your property that you own right now, right? How about owning a portion in a fund? Putting in some money in a fund somewhere, and you know, just having that money grow for you, like having money working for you. So what does that mean? And today, that's what I want to cover up. I want to have this conversation with you guys. And whilst I'm having these conversations with you, I want to be asking questions from you on what do you actually understand around that, okay? So let's talk about it. The first thing that I'd like to address is that for a lot of us, we don't know these things, right? For a lot of us, we don't know these things. That is the reason why I come out here and to talk to you about it. And my apology, my voice is a little bit squeaky. It doesn't sound like, it's sharp. I just been suffering from some bronchitis, coughs and whatnot, with COVID. But I'm getting over that. My body's getting strong, and I'm talking a little bit less. And, that's why I'm here at this hour. But let's talk about it. Let's jump into it exactly, and let's talk about what are some of the benefits that you're going to have by actually investing alongside others, and you get to own the portion of a portfolio, right? A portion of a portfolio. How big of a portfolio is? So let me start off by saying that there is a fund that is called a Section 12J fund, and this fund is coming to an end soon. And when I mean soon, I literally mean today, 17 May. By the time that the 30th of June 2021, this fund will not exist anymore as we know it. What do I mean by that? So simply put, a few years ago, around about 2015, the Minister of Finance back then, together with SARS, they put out a special vehicle of a company that's called a Section 12J. So it's like a normal company, but on top of that, this company has special rights where if anyone is to invest in this company, SARS will give the individual a rebate. What is a rebate? For some of you, you already have medical aids and life policies and things like that. So each year when you submit your taxes, SARS is going to give you some money. Whenever we are looking for a SARS refund, well, this is the same thing. Now, on here, it basically means that if you are to invest in a Section 12J, and by the way, remember, we're not the only company that have a Section 12J, because you might be thinking, hey, TJ, they're special now that SARS needs to give you a Section 12J. No, there are so many companies. I think they said there's around about 246 companies that have a Section 12J. Now, all of them, they do different things. They do from agriculture, technology, to hospitality. And for us, particularly, we play in two things. We do student accommodation and we do agriculture. That's the area that we want to play in. Why do I want to do that? It's because I want to play in an area where your money is safe, but where you're also getting a good return. Okay, so why am I saying that the money is safe? Because everything that we are doing is underpinned by an asset. But what do I mean by that? It basically means that If you invest the money in the Section 12J, we're going to buy an asset, a property. So which means that your money is not going to go anywhere else besides buying this property. So for that reason, it basically means that, well, your money is secure because it's sitting in a property somewhere. It's different than investing in other things where your money, you don't really see where it is. In this time round, your money is sitting on an actual property. So that's the beauty of it. Your security is high. Okay. But that's point number one. Let me jump on to now, why did the government or SARS agree or came up with this thing that the Section 12J needs to exist? Well, it's got its own benefits. What are some of those benefits? Well, number one, a lot of people generally take their money out of the country, but now the Section 12J is encouraging people to keep their money in the country. And now if we're keeping the money in the country, what now happens? Well, the bottom line is that jobs are going to be created. The bottom line is our own economy in South Africa is going to be stimulated, right? And out of that, it's going to help all of us. And this is the reason why SARS agreed to this. So it's been running from around about 2009, 2015, that's when it really picked up. And, you know, there's been amazing things that has been done with Section 12Js, venture capitalists, that's what it's called. But now how do you, or where do you come in? How do you come in? Like you, Tsepo, Maria, Susan, Betty, whatever your name is, how do you come in? Well, for you to qualify into the Section 12J, you just have to have some money. So you just have to have some money somewhere and you can go invest in it. When you invest in a Section 12J, it basically means that, number one, you get ownership onto the fund. So you get what is called a share certificate. Remember, each company comes through with a share certificate. You know, shareholders, share certificate. So you get a shareholder certificate. That is the certificate that determines to say how much did you invest, right? And how many shares do you have? And out of that, as and when the fund is growing, definitely the fund is going to grow because we all know properties grow, right? And out of that, what is now going to happen is that if you are buying today at 100,000, you can sell it tomorrow for 120, 130, 150, 200,000. It doesn't really matter. What matters is that your share certificate is your title deed, is your promise of security that within this fund, you own a piece. So that's number one. Number two is that you also get to have what is called a tax certificate. Now, what is a tax certificate? Remember, I did say that, for an example, if you are employed, right? So the fund is open to everyone, but specifically for those that are employed. You might be earning at the moment, you could be earning around about, let's say, R1 million or maybe 1.6, right? Let's just say that's your cost to company. But with all of that, it basically means that there is a section or a part of money that is coming through to you. And on top of that, that money is going to go through to SARS. And that money is now going to SARS. And generally, that's around about 30% all the way to around about 40%. Okay, for some people, they are earning less. But the bottom line is that there is a section of money that you are paying to SARS. Now, for each amount of money, whatever capital that you're going to invest in the Section 12J, how much is it? Let's say 100,000. I'm going to do this so that it's, it's easy mathematics for all of us, right? For ease of mathematics, it is 100,000 that you're going to invest. SARS is going to give you, if your tax bracket is 30%, SARS is going to give you 30%. Next year, this time, well, we are now at May. So SARS opens up in February. They start paying out, what, in July, somewhere there, right? They will pay you 30%. Boom. That money, it's got nothing to do with TJ. It's got nothing to do with the fund. It's got everything to do with what the SARS, why they brought this Section 12J in place. Now, already on your 100,000, you've made a kill. You've made a kill where you're going to get a 30% return in 1 year. I don't know, but you've made a kill already. And this is why a Section 12J is a boss investment at this stage, right? So that's the first part. That's the benefit, like the bulletproof benefit, like the benefit of a Section 12J. Then let's move on. So we have said that the Section 12J is coming to an end, right, in June. But now I'm talking about getting your rebate in July next year. Like, how does that work? Okay, let's simplify it a little bit. Now, for any investments that are done between now and June, they'll still qualify. Post-June, they don't qualify. So which means that if you had to call me on 1 July and say, TJ, I still want to put in my money, yes, I will accept your money, but unfortunately, this 30%, this 45% that we're talking about, you will not get it. Your money needs to be logged under my safe with Joe, my fund manager, and that money is entitled to your tax rebate, which is the refund that we all know. So you get your refund, right? Rebate, same thing, okay? Now, out of this now you've got your money back, but the fund is going to go to work. What do I mean by that? The fund is going to continue buying properties. And what is your now return? So remember, you already got, let's say we said, if you are on 30%, now you got your 30% back. So that's kind of like your profit, if you may want to call it that. But in other words, you actually have money at risk. You only now have 70% of your money at risk. If you're on 45%, you only have 55% of your money on risk, because the other money you got it at SARS. But when we are now calculating your returns, we don't calculate based on your money on risk. We calculate on your full investment, which was 100,000. And by the way, right, as I'm talking right now and you think that you might have some questions, ask me those questions. I'll gladly, answer those questions as I go along. Right. So let's continue to talk about it. So there you are now. You've got this tax rebate, which was your profit, and which is a big savings, right? And which is a big win. But now the fund continues to work. So June, July, up until I don't know, the fund will still exist. And what's going to happen now? How do you benefit from it? Well, simply put, you are still going to benefit from it because there is properties that have been bought, and within those properties, they are going to give you profit from the rental. So with that said, it basically means that your money, the 100,000, but now less the rebated money that you already got, but in the fund, we don't calculate it that way. We calculate 100% of your 100,000, and that money, you start getting what is called dividends. Dividends, what is that? Dividends is profits. You start getting profits. Now your profit starts coming through to you at what rate? What is the rate now that you're going to be winning on your dividends? At the moment, we're talking 7.5 with the current rental for 2021. However, we have also seen that, like for instance, the rental properties, they shot up with around about a 6.7, right? So which basically means that if we are to achieve the same for next year, remember Taurai is about demand and supply, it means that your 7.5 is going to bump up, right? So which means that year on year, you're going to have that upside of when the rental prices increase. Right. Now, you're not getting that from most of, I don't think there's actually a Section 12J that is promising that actually. But just do your homework. Go and look out like for like property Section 12Js, who are they and what are they giving out is the return. Okay. Now, with that, your money is not stuck on one property. It's a fund. So your money goes across all the properties, you know, and within that, we then take and say 5 shares or 10 shares of the fund is what you own as your shares. But on top of that, all of these that we have, the properties here, you owning a 5% of that, right? Does it make sense? So if the fund is owning, let's say, 5 million, and you have contributed 5%, this is a contribution of the 5%. It doesn't mean that if we go and buy one property now that's 2 million, that's what's worth of your money. No, it's the entire money. It's the entire fund, because you are investing in the fund and the fund owns all the properties. But here's the beauty of it. You are not doing anything other than investing. There is no work for you. There is no chasing tenants. There is no cleaning the plumbing of the toilets. There is no worrying about the maintenance, what's happening on the properties, gardening services, caretakers, nothing. You're investing and you chill. When you chill, you get your money, right? When do you get paid? I think that's an important question to be asking. When do you get paid? So you get paid, the SARS money is going to come to you next year, around about in July. You know, that's when the disbursements comes in, right? So you submit around about July, they do the payouts, boom, you got your 30, 45%, you get it. Or whatever tax bracket that you're in. However, this 7.5 that I'm talking about also starts in July, and we pay out on an annual basis going forward. Does it sound exciting? I haven't seen any questions coming through, so I'm trusting that what I'm saying, what I'm showcasing with you guys, it's making sense, that it's easy to digest, right? Now, when can you start investing? Now. If you already have the money, now is the time to invest, okay? So if you've gone through this presentation with me, it's a short presentation, I thought let me come out and let's have this conversation. If there is anyone, one questions that you want to ask. And in the comments, I am going to put in the comments, I'm just going to put in there where you can actually find, right? Where you can actually find, so like you say to me, TJ, how much money? Well, the starting one on the Section 12J is 50,000. That's your entry criteria. But you can invest like 2 million, 3 million, whatever the case is. Well, the maximum is around about 2.5. So you can invest. This is for you. This is for your generation. It's money that you're putting away. It's going to grow. It's going to grow. It's going to grow. And it's really good money that it's going to grow for you. So whilst I'm jumping in here so that I can give you guys, the exact where you can actually reach out to us and say, well, I'm in, you know, I want to go ahead with this. So how do I do it? Well, it's simple. I am going to share a link right now, and in there it says join M5. And with that, we can have a conversation. Someone from my team will give you a call, we'll have a conversation around it and fill in the details. It's an application form, that's what it is. Fill in the details, and out of that, we'll get you on board. You know, don't miss out on this opportunity. It's a great opportunity. The Section 12J is coming to an end. We don't know whether they're going to introduce something. So if you've got some money that you got, I'm saying that give me that money. Let's go to work and let's produce some good results for you. It's Section 12J. That's what it's all about. And if you got some further questions, I'm going to leave this open as well, right? So that you can ask the questions and I'll come back to it and answer all the necessary questions around it. Step number 1, you need to fill in the form. Step number 2, we'll give you a call. Step number 3, there's some legal paperwork that you need to sign. And then number 4, then you need to transfer the monies to our fund. Number 5, you then get your share certificate together with your tax certificate. Tax certificates will be issued out in June. And number 5, we're going to go to work. We'll go to work and make money, or more money with that money. And who knows? We might have a step number 6 where you can come to the properties that we're talking about, and you can also see them in real life, that this is where your money is gone. Right, it is ITJ, Taurai Jack, your boy from M5 Property Addicts, and it's been great hanging out with you guys on a Monday like this one. And we've been talking about investing in a Section 12J. And if you didn't know what a Section 12J is all about, this is it. You can literally, this is how you can build your property portfolio. So for some people, they don't know how to build a portfolio, right? It might be limiting by going to buy one day, going to buy there, going to buy there. But you can actually put in your money in a fund, and out of that, it spreads across. So with that, you're not just owning one property, you're owning a multiple number of properties. And that's another easy way of building your own portfolio. That's another way of creating a bigger portfolio that you are not even managing, where the challenges of managing and recouping rent and doing all the other things that people don't like doing, we will do all of that work. We understand how to manage these things. So don't go alone on this. Invest in a Section 12J like ours. But do your homework. Check out what we are offering you here. I did mention all the Section 12J, you get a rebate. All of them. There's no difference. So whatever you are earning, that's great. There is no difference. Okay? So whatever that is your tax bracket, you're going to get that. So that's an apple to apple with all the Section 12J. The difference now comes in terms of how much each Section 12J is going to give you. I am promising you a 7.5 after all expenses. So 7.5 in your pocket, right? And go out there and see whether there is anyone else who's giving you a 7.5. That's number 1. Then number 2, go out there and see whether anyone else is promising you the upside of the rental. Because I'm in the rental space. So check to see whether there's anyone else who's giving you the upside on the rental. If there's no one, I need your money to be working with me tomorrow, starting from tomorrow. Okay. So in the application, in the comments there, I am going to give you the application form. Check it out. Can you do this as a company? Yes, you can, right? You can do this as a company. If you're a small company, big company, you can do it, right? Can you do it as an individual? Yes, you can. Can you do it as a husband and wife? No, you cannot. It's a personal, individual thing, right? So yes, you can do it. So you can club the money together. And I would suggest that, you know, if you're husband and wife, like myself and Jenna, if I'm the one who's going to hire tax bracket, I'm going to take that money, 200,000, and so that I can claim back. If I'm the one who's on 45%, she's on 18%, it's not going to save us, right? So that's what you can do. What about if you're a trust? So you own a trust and you got some money in the trust. Can you do it? Yes, you can. Again, trusts, they are around about 45%. So which basically means that, you know, you're going to be banking some money there. Okay, awesome stuff. I'm hoping that this has been of great information. If it's been, give me some thumbs up. And if it hasn't been, I don't know what happened there. But I'm hoping that this has been some good information to get your money to work for you. That's what I'm here for. I'm creating opportunities so that your money can be in a good space so that it can make more babies, and those babies can be beneficial to you, to your kids, to your grandkids, to your grandkids and kids and kids, like the fourth, fifth generation. That's what we're after here. And with property, it allows us to do that. My name is TJ Taurai Jack, and I'll catch you on the next video. For now, fill in the application form.